Hello there, welcome to the streams. It's Luwasi Charts, and I'd love to thank you for joining me on this stream. And I want to talk to you today about risk management. But before I go on, I'd love to thank my mentors, Robert Kiyosaki, who wrote the book Rich Dad Poor Dad, Tim Sykes, who wrote the foreword to the book The Penny Stock Course, and then Matthew Creter, who wrote the book Rocket Stocks. All right, let's jump into it because I really want to talk about risk management. Now, many professionals they say your your risk size. Okay, so let's say I'm going to give this example. Let's say we bought at this price here. Okay, because we recently made a trade and we bought at that price. Now eventually, okay, the price will go up because that's how the system is. You cannot control the direction of the market, you can only read the market. Okay, you cannot control the direction, you can only read the market. So for example, we buy here, right? But look at the market crash. It's not over. Okay, so we have this and this. So the market psychology began here. This is where the market crash began. This is called an evening star. So this is the resistance right there. The signal came in here. Now, we don't know when the price is going to find a bottom and turn. We really don't know. But we have an idea, okay? So if you look at this price, this chart pattern right here, this is showing you that the bulls are selling. They're short selling this market. But if you look at this momentum here, it shows that the I mean, this shows that the bears are selling. This shows you that the bulls are fighting back. So bulls use momentum and the bears are using trend. Now, the key is to follow momentum. And that's what this strategy is doing. We are following momentum. So notice that there is a correction right here. The bulls are fighting back. So these are two new laws. All right. Why are they two new laws? Because the bulls are fighting back. This is called the ADX. So when you see these red dots above this green dot, it means the bears are fighting the bulls. Okay. Now there is a challenge. The challenge is that this price is in an uptrend. You seeing that? Starting from here, within the same year, the price is in an uptrend. Okay. But there is a sell-off. You see what I'm saying? So eventually, within a year, the 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 stock price will go up eventually. Okay. But sometimes it goes up within 2 weeks. Sometimes it goes up within a month. Sometimes it goes up within 4 months. So when you are doing risk management and you are using debt, when you're using margin, you need to calculate for volatility. Okay. So what most experts advise is you have to hold your position, right? So ideally you only bet 20%. Okay. You only bet 20% of your main position. So let's say you have an account of $100. Now this is very important for you to understand because even as you decide to journey into this world, because right now I think the Federal Reserve dropped interest rates, so you're going to see a lot of people jump into the stock market. Why? Because they want to gamble. All right, the stock market is a gambling. So what's going to separate you from these gamblers that are coming in? Because trust me, the next economic crisis is going to be insane. So you need to prepare, all right? You need to prepare. The next economic crisis is going to be insane. Uh, I'm not going to do my stream. I'm going to go offline for a little while, but I'll be back on Tuesday, Tuesday or Monday, depending how I feel. So this is the last stream, and for the week. So I'll be back maybe on Tuesday or Monday. So I really need to nail this down to you. Uh, I know we usually find stocks to trade and all that stuff. We get into the strategies, and we might dive into the strategy later on, depending with how I'm feeling right now. But I really want to nail risk management down because there is going to be a huge market shift that's coming. Okay. So yesterday we found Walmart. Walmart was one of the ones that I found yesterday. Now again, I have to warn you, right? So with Walmart, as you can see, the price crashed, right? But look at the look at the chart pattern. It's very similar. The difference between these two is that this one crashed more than this one, right? So there seems to be this thing going on whereby stocks that have a price above $100 are not as volatile as stocks that have price below $100. All right, so it is a good observation to like take note of. Very important. So again, this is risk management. Okay, so if you're trading something, let's say below the price balance, most likely the volatility is gonna be crazy. Now that does not mean you should like increase your position size. It just means you need to be very aware of position size. So for example, in this scenario, my position size would only be like 20%. But in my last video, my position size is 60%, which is like three times, right? And it's a very choppy stock. So ideally you want to buy something above $100. All right, now we're going to dive straight into now the presentation. Okay. Presentations are very important because they frame our minds. Presentations frame our minds to think in a certain way. Also, I want to talk to you about gold. I think gold is definitely one of those buys that out. So you can see gold in an oversold market. Now, I want to talk to you about our strategy where we're just focusing on one market. Now, this is the view, and then again, I'm saying like trading view is very advanced. Okay, it's for advanced traders, and you can see the system I'm using on trading view. It's a little bit, complicated, but if you kind of understand what's happening, then you can really like, you know, get into it and just like make money from it. So, this is a trade I made. I think I made this trade yesterday. So basically, what happened was I used the trend indicator, right? So I waited for the RSI, ROC to be above zero line, and I was waiting for uh, this red these red dots to be above the blue line and the green line to show trend strength. So it was a very rare, move, uh, but I did it. So basically, this is where I bought. So when I bought it here, the momentum was actually positive. It was not negative. And a rare situation. It was a very rare situation. Unlike this system, which is like a pure reversal, right? It's a pure reversal system, right? It's based on pure reversals. And so I just wanted to show you what it is you are dealing with. So in such a system, again, you want to And if you're using margin, you want to buy at least that's above $100. The more expensive, the better. That's how the system is. So the more expensive, the better, because the less volatility, ideally above $100. So now I want us to dive into the presentation. Let's look at why we are using only FinViz. Now, when we're using FinViz, we're only focusing on price action volume and key levels. This is very important for you to remember, because we're trying to simplify the system. We're trying to slow it down. Okay, we don't want to complicate things, so we are avoiding using tools like TradingView. We're just using FinViz only. Okay, that's all we're doing, and then we're only spending 10 to 30 minutes daily. Remember, the emotional stress of FinViz is low. We have clarity and simplicity, and we're specializing, okay, in the S&P 500. Now the cost of FinViz is very low. Again, we're eliminating, reducing, and raising and creating. Okay, so we're removing the noise and competition. We're lowering the cost and complexity. We're increasing expertise and consistency. Unique value are different from 95% of traders. So this is what we are doing for FinViz. It's very, very much very important. Okay, it's very important, because remember, we're focusing mainly on strategy. So I want you to remember these points. It's very important before we dive into FinViz. Remember, we're only focusing on S&P 500 stocks, and our main is price action volume and key levels. And that's why in the previous example I showed you, like the risk management, so you want to trade at least stocks above $100. Okay, above $100 at 10x margin. Okay, ideally anything below $100, you want to reduce your position size to 20%. Okay, so below $100, reduce your position size 20%. Anything above $100, you can survive a 60% position size. So remember, position size for 60% at 10x margin, that's for stocks above $100. And that's the risk management side of it. So now I want us to jump into the screener, because we're going to do it together this time. All right, we're going to do it together this time. I know I usually have like some slick presentation, but today I want to do it live. We're going to screen for the stock live. All right, we're jumping in, we're jumping the bullet, we're jumping the gun. So remember my risk management. Remember, anything below a price of $100, reduce your position size to 20%. Anything above the price of $100, you can increase your position size to 60%. And this is a 10x margin. All right, so that's our strategy. Okay, so now we're here. So the first thing you want to do is you want the price to touch the 50-day moving average. So on the 50-day moving average, we're going to say price crossed 50 SMA above. All right, so price crossed, we're going to say price has crossed above the 50 EMA or SMA in this case. So meaning it's touching the 50 SMA. We're going to say the 200 SMA should be below the 50 SMA. This is what we're going to say here. Now remember, anything above $100, position size 20% at 10x margin. Anything below, any stock price above $100, position size 60% at 10x margins, because I use 10x margin. All right, I'm very aggressive. So and then now you come here to 20 SMA, you say price should be below 20 SMA. By the way, I did my workouts, I think that was like 2 days ago, and I feel great. I feel awesome. So now the next thing you do now is you want to focus on S&P 500 only. All right, remember that's all we are focusing on. We're focusing on S&P 500 stocks only. All right, that's what we are focusing on, only S&P 500 stocks. This is very important, and we're only using Finviz. We're not using uh, TradingView or nothing like that. So this is not a presentation. This is like I'm doing it live right in front of you. So here we're going to change the index to S&P 500. Very, very important. Now after that, remember we already did the moving averages, and remember after we scanned the stock on TradingView, you saw that the price was actually in a reversal, right? It was in a downtrend. There were short sellers there, but despite that, the momentum was high. The next thing now we do is pick the candlestick patterns. Already we have a potential of 11 stocks. Now you can look at the price. So just from looking at the price, I can tell you the margin level you should expect. So anything from here going upwards, your position size should be 20%. Okay. Now, can you trade? Yes, you can trade them even without candlestick recognition, and that's the good news. But the candlestick recognition just kind of puts you in a mindset of in a mindset frame of this is what's happening. Okay, it just gives you the market psychology. It's not really an entry tool. It just tells you what's happening in the market. Okay, so you can enter any of these trades with this simple system right here. You can enter any of these trades, but remember the strategy, right? So like, let's say for example, for this one here, this is Snap. The price is $300. So for this one here, my position size will be 60%, right? Position size 60%, 10x margin. Because of the high price, it's $300, we will have less volatility. Okay, we will have less volatility. So this is what I'm finding. This is what I'm discovering. Like, okay, these prices that are below $100, they are very, very volatile. Okay, unlike, there you go. So this one, I would only position size at 60% or more. And no more, 60% or less, because it's $300. Okay, don't rely on things like breaking news or nothing. No, 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 no. Don't rely on anything like that. I want you to go hardcore on risk management. All right, focus on risk management. So this one, the price is $300, and those stocks with prices above $300 are less volatile. Now, does it mean it won't be volatile? No, it will be volatile, but they're less likely going to be volatile. So we still have to use candlestick patterns. All right, and this looks like a bullish counter attack to me. So in the beginning, I would advise you to get the Finviz so that you're able to recognize what is happening. So this is just market psychology, right? It does not guarantee that you are going to, make a profitable trade. So it's just telling you like what's happening in the market. So we're going to start with a long lower shadow, and we found this company here. It's called Southern Company, SO. All right, long lower shadow. Now with such a company, remember it's below the price of $100, so your position size should be 20% on this company. We're going to try the hammer now. So what the candlestick patterns does is they just increase your probabilities, right? Now, can you trade without them? Yes, but you are trying to increase your probability of that move going the way that you want it to go. What are usually the best, and inverted hammer, they're usually the best ones. So all of them, they're below $100. So remember, as you are going in, reduce your position size to 20%. Okay, reduce your position size. So this one is very choppy, as you can see. So inverted hammer, we have found PPL. Spinning top white, and the price is below $100. We have found CMS on spinning top. So remember, all of them, they're below $100. So I want you to reduce your position size. I mean, look at this price pattern here. This is crazy. So imagine trading this. Look at how volatile this. This is what I'm saying. Anything below the price of $100, please, please, please reduce your position size to 20%. And that's the mistake that I made in my last trade. 60% is good, but I don't think it's safe enough. I did not get and also breaking news. This one has breaking news. So this is a good one, this one. You also want something with breaking news like this. But even though they have breaking news, please, 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 I want you to reduce your position size. Look at the volatility on this one. So I want you to reduce your position size to 20%. Anything below $100. So just give me a second. Study this chart. Today we're talking about risk management. So I want you to study the choppiness. All right. Look at how choppy it is. Study how choppy it is. Look at these gaps. So notice that those that have a price below $100, they're very gappy. All right. So you want to reduce your position size to 20%. I'll be coming just now. Study this chart. Oh, I will leave you with this. So just give me a second. I'll be back. Guys, sorry about that. Um, man, I have to end the stream right now. But look, the point I just want you to get is I'll have to end the stream very soon. But the point I want you to get is remember, focus on one thing. So I want to see if we can find another stock below the price of $100. I mean, above $100, because I want you to increase your position size, right? Remember the goal. The goal is to find the stock above $100 so that you can increase your position size, right? So far, all the stocks we found are below $100, which means a lower position size. Now, a lower position size means less profit. And all right, so we have found one, and we have achieved our goal. It was now on a spinning top black. We have found one, so TPR. Okay, so not this choppiness that was there before. So on TPR, so TPR is the one that I would trade. Okay, so I want you to, so look at how smooth the chart is. Compare it to CVS. No, not CVS. Sorry, I've forgotten the other one that we had. CMS, right? Okay, even this one looks smooth, but I still believe it's choppy. Like, look at how it has gapped down, right? And it's below $100. So we want to find something that's a little bit more smooth, like TPR, right? So TPR is $111. Okay, so we want that. Uh, yeah. So $111. That's TP. Okay. Yeah. So sorry about the pause, guys. Sorry about that. But yeah. So this is what you want. You want something above $100, and I want you to take note of the price. I like smooth, right? Notice how smooth it is. It's moving, right? So you want something nice and smooth. So above $100 ideally. Uh, so in this one, this is my favorite one, TPR, because with with TPR, uh, since it's above $100, the price action is a bit smooth, right? So with TPR, your position size can be 60%, okay? But with these others like CVS and CMS, your position size should be 20%. So with CVS, you probably make, let's say, 70% on your position. And then with TPR, you probably make, I know, 70%, sorry, 40% profit. Then with this one, you probably make, you know, ideally 70 to 100% profit. Okay, but 100% is very conservative. It's ideal. Okay, so you make two times your money. This one you, so this is what you want. Okay, this is what you want to trade, something above $100. Um, uh, 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 there's always something about experience. Like nothing beats experience, guys. Like you really just have to have experience in this world. I wish there was a way to do things without getting burned. You know what I mean? But that's how trading is. It's kind of like dating. You know what I mean? You gotta do it via experience, and you gotta be ready to manage your risks. So luckily, with the trade that I made with KR stock, even though my position size was 60, I haven't received a margin call. So let's see. I'll do one last thing before I close out the stream. Again, I'd love to thank you for joining me on the stream. Support the channel, get a Finviz account. Um, so remember, 20% position size for any stock below the price of $100. Okay. So I'm suspecting my let me see what we have here. So I want to just check the after hours on KR, though it doesn't mean anything. But remember, any stock that's below the price of $100, you want to reduce your position size to 50%. All right, because of the volatility. Of KR. Wow, the volatility is insane, guys. Checking them after hours also helps. But you know, some of these after hours are insane. You know, the volatility is insane, guys. It's really insane. That's why at the end of the day, you know, I mean, we can make all position sizes and guesses, but to be safe, you just want to position yourself at 20% your account. Like, you don't want to go above 20%. I mean, I could easily say 60% and all that stuff, but 20% is your best position size, no matter what you're trading, whether it's below $100 or above $100. Position yourself to 20%, and that's the final verdict. So I'd love to thank you so much. So remember, position yourself at 20% your account. I think I've changed my mind. I've removed the 60% position size. We're just going to remove that. So position your account at 20%. Position size 10x margin. That's what I would say. So yeah, wow, let's go to breaking news. And this is what you want sometimes. You know, breaking news does help. It does help. Because one thing I'm seeing, like, okay, breaking news helps. Breaking news helps. So I'm looking at the after hours and how it's trading in the after hours to help me gauge risk. All right. I see. So maybe what we need to look for is definitely the breaking news, you know, thanks to people like Tim Sykes. So maybe we can still increase our position size to 60% with breaking news as the catalyst. Right. So I think this one is good. So we'll end the video with that, right? So you want to have breaking news. Okay, breaking news will help. All right, so let's keep our position size to 20% for now. Let's reduce it. Let's remove 60%. Let's keep it to 20%, guys. We have to navigate the markets more carefully. And also, let's only look for breaking news, right? Like if we see breaking news like this, at least we know we're risking less. Because I'm looking at the after hours on Market Watch. And let me show you what I mean before I go. And this is very, very important for you to check out. Because I'm looking at after hours, right? Remember we had CVS and TPR, right? So I'm going to show you something before I close out. So this is what I was looking for. This is what I was looking at, right? So I created a watch list right here on Market Watch. So I'm looking at the after hours, right? So if you compare the after hours between TPR and CVS, right? Look at the after hours. CVS after hours is like lesser than this one, right? And CVS had breaking news. You see what I mean? And so that's what I'm also looking at. I'm thinking maybe uh, the one with the breaking news, the one with the breaking news seems to be more favorable. Because remember, TBR does not have breaking news. I saw another one with breaking news. So let's check. Let's just confirm that with another one with which had breaking news. Uh, 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 uh. It's gonna be yeah. So sorry about that. um, this is crazy, guys. I'm living a crazy freaking life right now, and I'm trying my best to stay sane, but this life is crazy. All right, so I think this one also had breaking news, so I want to see if it has breaking news so that we can compare on Market Watch on the after hours. So I think this one also had breaking news. So remember, guys, just to reduce your position size to 20%, just to stay safe. I'm trying to see where it was PPO or CMS, one of the two. All right, there we go. So, oh yeah, by the way, get the FinViz account. 7-day free trial offer valid for a limited time. I don't know how long, so get 7-day free trial on FinViz. Remember, FinViz is offering awesome updates. I mean, imagine receiving breaking news, and I think they're just doing me a favor by giving me this breaking news, right? Because I think at the end of the day, uh, breaking news is not free. All right, so the company is SO. So let me check on my watch list here. Tick symbol SO. So let's check the after hours. Remember, it has breaking news. So I'm suspecting those with breaking news have lower after hours or after market trading risk. So we can see SO right here. I don't know if you can see it, but the change is low. Like these two, remember these two had breaking news, right? So this is what we want. We want to trade low risk setups. So compare 0.29% and 0.06% to this one. So ideally you want to trade the one with breaking news and low after hours volatility. Okay, so that's the gist of it, right? This is how you're going to reduce your risk. Now if you're not interested in it, you don't have time to check on your watch list to build a watch list and all that, remember, just reduce your position size to 20% and just go in, right? Just reduce your position size to 20% and just go in and hold, okay? And just hold for like 6 months or something like that until the short the short sellers give up, right? So if you want to increase your position size, then this is what you do, especially if you want to increase to 60%. All right, check the after hours trading to give you a little bit of context. So I'd love to thank you so much for watching this video. Remember, stick to FinViz, it's the best. See you on Tuesday. I'm not going to be around for a while. I'll miss you guys. Please keep trading, keep doing your thing. I love y'all. Remember, just focus on risk management, focus on one tool. I know you may be a beginner and you're still learning. Read the disclaimer below, please use a simulation trading account. And yeah, sign up for FinViz so that you can receive breaking news alerts. You just saw for yourself how breaking news reduces your risk size. So I'll keep the stream open for about 2 minutes before I end it. So thank you again. Take care. Bye bye and peace out.